Good morning, everybody. It is December 31st, and the stock market's giving us a little bit of a bounce as we predicted last week. How far does it go? Hard to know, but there's probably continuation to the downside in the next month or two. I don't think this rebound will last too terribly long. In any case, you can see that I'm wearing a 49ers shirt. Now, I actually didn't make this bet, but I would have. Based on the Packer and 49er game. So a 49er fan, here you go. Here's the shirt I bought on Amazon, red and gold, till I'm dead and cold. There you go. I actually was a big Joe Montana fan. So, I'm not too out there. The more important thing that I'm wearing is the Brewers cap. So I will be at spring training from March 2nd to the 13th. If you're in the Phoenix area, especially that first week, let me know. I'll probably do cocktails a few times, once in Tempe. On that Tuesday, we're going to a Angels game. I think that's about the 10th or 11th. What else? I'll be in Scottsdale a couple of times. We're going to go to Maryvale for a Brewer game, Brewers-Cubs game. I don't know that we'll be getting together with anybody that day. But in any case, from the 2nd to the 14th or 13th, I don't remember which day we fly out, I'll be in the Phoenix area. So the risk on, risk off report by Shooter. I just want to show you the big chart on S&P 500 major support levels. As you know, I think that this is the support level that we probably get to sometime during this correction. So you see the market come down to here. And this is the top of the 2020 range, actually a little bit above it. So this line here and this line here, I think we have a very hard time breaking through, but we could definitely get to it. So here, the 50-day, this area a little bit below 300 on SPY. I think those are pretty possible areas that we can get to. This would be more in line with the COVID correction from here to here, and we will see. And then I would consider this line here kind of be our Armageddon scenario. And I don't know what would cause that. Maybe persistent inflation that they really had to beat down. But as you know, I think that inflation lets up in the second half of the year. There's only so high oil can go. Supply chains will get better, things like that. So I let out a retirement income options article. There was rumors that I wasn't doing it anymore. A couple of people actually quit margin of safety, so I invite you to come back. Look, I wrote an article, started December, told you all to write covered calls across the board and trim. Well, those covered calls expired a couple of weeks ago, and actually last Friday or 2 weeks ago, and you should have had some things called away. So if you'd written covered calls on a lot of these things that I told you to write covered calls on, you're just now sitting on some cash and you don't have anything really held, and it's time to look and see what to do next. Well, what to do next is write a few puts. There really isn't anything overbought right now on the weekly charts, so there's not really covered calls to write. So just remember, follow the cycle. If you follow this cycle and you make 4, 5, 6 batches of trades a year, you're going to be in pretty good shape. You'll double your dividends, triple your dividends probably, if not much more. Remember, you write options on growth stocks, you're getting premiums that are way above dividend levels. So what are we talking about right now? Well, I want to talk about the big picture. So a few months ago, I showed you the weekly RSI charts and the monthly RSI charts. So on the weekly, the S&P 500 is suddenly just coming off of oversold. See that down here in the RSI? RSI is in the 30s. But if you change it to a monthly chart, you see that it's just coming off of overbought. So which one is more powerful? I believe that we are going to see the overbought monthly chart come down as the weekly chart turns back down after a little rebound. So it usually takes 1 to 4 weeks for a weekly oversold RSI to bounce back high enough to reverse again. 4 weeks is very common, but it can happen in 1, 2, or 3. So how long do we get a rally here? We're going into the start of February, and monthly flows into the stock market are highest the last couple days of the month and the first week of the month. So this could be a pretty good week for the stock market. It's sold off at the end of January the way that we said it would. And now we probably get a little bit of a relief rally, maybe into next week. We'll see. There can always be bad news between now and then. Nobody can predict whether or not Russia is actually going to go into Ukraine. Is it posturing to get some natural gas deals? Who knows? But the market is dramatically overvalued still based on earnings growth that'll probably be flat this year and disappoint. I just watched a couple of analysts on Bloomberg, and the guy from John Hancock is saying exactly what I've been saying, is that earnings are going to disappoint, that they are not going to be as robust this year as they were in the last couple of years, with the Fed being easy and with oil being more expensive. You're going to have some companies in the commodity space that do well. That's why we added a couple to our list. However, we should expect some earnings disappointments. When there's earnings disappointments, you get valuations contracting as the market reassesses things. Remember, rate of change is what matters the most, not the absolute numbers. So it's as things change, we see the market react. So when a chart is moving up with a nice bend upwards, market loves that. As soon as it starts to flatten out, market hates that. And that's when the adjustments occur. So where are we probably going to see some big adjustments? Probably going to see inflation moderate. This is the CEO of U.S. Steel. Thank you, Kathy, for posting this. He says, while markets continue to self-correct, the market backdrop is favorable. Supply chain issues will ease, as I've been telling you. Inflationary pressures will abate. Savings rates remain high. Cash remains on the sidelines, and demand remains pent up for the markets we serve. And that's a lot of things. There's a lot of pent up demand out there. We have seen Omicron kind of crimp travel all of a sudden. However, that probably eases up, I would say, in the next month or two. I think going places starting in March, and especially for spring break, and then again in the summer, that's going to happen. People aren't going to stay home. Now, you have people who are immunocompromised, which seems to be the big problem with COVID. I don't wish that on anybody, and I think that their lives are going to be the toughest of all of us. So in any case, Omicron is the wild card that FS Insights talks about. It's the wild card that I've talked about. If it comes back worse, then we have another shock. And if we have another shock from health or war or China or whatever, but if we have any type of shock that disrupts the economy again, especially one that keeps people at home, well, then what happens? All these innovation stocks go back up. So when we do the screening, and I have the file in here for you, what we find out is that there's an awful lot of stocks that are heading towards technical bottoms. This is the technical analyst, and this is a guy that I interviewed a couple of years ago, actually, Mark Newton. So I don't know if any of you remember me talking to Mark Newton 3-4 years ago. They're talking about ARK bottoming. I agree with them. If you'll remember, way back about a year ago, I told folks that ARK was going to head into the 80s when it was up here in the middle 100s. And I was told I was nuts. Had people quit the service. And I said, well, after a few months, I decided 62 was probably the target bottom that I was looking for, just above the 0.786 line for the fibs, right below a whole bunch of people that would be selling if it got too cheap. And then the selling would abate. You can see that on this side of the chart. Supply and demand, folks. Supply and demand, basic economics, that's what determines price. The charts tell us about where the supply and demand is. I plug in some factors on the side that I keep to myself because, frankly, that's the secret sauce that gets me paid when I come up with these bottom fishing prices. And, the fact that I could do it when we were way over here, and now look at where we are. This is the second time in a row. I said these things in 2019. I said prices were going to come off quite a bit in 2020, and they did. Granted, pandemic, but I maintain that they would have anyway. And now we get these prices coming down here. So ARK is in a bottoming process. Probably get a little bounce up, which is happening today actually, and then finish up down here. Shooter is saying basically the same thing. So we take a look at some of the stocks in ARK. And what we realize is that some of them are getting very cheap. So let's take a look at Block, formerly Square. I have a bottom fishing price of 88, and Shooter is saying this says 83 and change, so $84. So Shooter and I are ending up at about the same place. I said what I said months and months ago, and he is refining it in real time for us. So 84-ish is probably where Square gets to. We'd have to have an Armageddon scenario for it really to break through there. Can there be an Armageddon scenario? Sure. but hopefully we just adjust if that happens. So I like the $100 March put, selling it for $12. Why that equation? Well, if my bottom fishing is 88, and I don't have to get the exact bottom if 84 ends up being the number, but 100 minus 12 is 88. That's what I'm looking for. Right now, that put with the prices rising today is only like $5. So you put in the limit order and you wait for it to come to you. That'll get you the net bottom fishing price. And the reason we set the strike price higher is because we want the stock put to us. Now, we would set the strike price lower if we were really just trying to skim some premium. This is a case where we want the stock put to us. If we can get square at a net price of 88, I mean, just look at that. It's almost a complete round trip. That is what you call a redo, right? When you're out on the playground and somebody says, you were out, you were safe, you were out, you were safe. Well, then we'll just redo it, right? That's what you're getting. You're getting a redo on a lot of these stocks. Take a look at Zoom, same thing. 125 minus 7 is a shooter's bottom fishing price, actually. So he is 135 right here. And he says if it doesn't hold 135, 118 is the next level. So this is really where we're at, somewhere from the middle 130s to the middle 110s on Zoom. Why is Zoom a big deal? Well, you're on it right now, and they are making money. So a lot of these companies, people run around saying, oh, these aren't profitable companies, and that's bullshit. They don't know what they're talking about. For the most part, these are all profitable companies. Now, a lot of them are pumping money into growth, so their earnings look suppressed. What companies in your recent memory, the last 10 years, was that the case for? There's this Amazon company, and they kept pumping money into growth and logistics and all the things that they are now for the last 15 years, really. And people are like, oh, Amazon doesn't have any profits. They just kept growing and growing and growing the company. And then one year, Jeff Bezos tapped the brakes just a little bit on the expenses and the CapEx. And what happened? Amazon suddenly becomes super cash rich and profitable. A lot of these companies are going to do the exact same thing. Zoom is going to be one of them. They've expanded in the VoIP. You take a look at Zoom and you take a look at their pricing power, take a look at how big it's become. The fact that they jumped all the big players and really just have better technology at this point, you're not going to see people switch to Microsoft. You're not going to see people switch to other things. Zoom is a big deal. It's here to stay, and they're going to pump out massive revenues and massive profits up from the profits they already make. They're already making $4 a year. So it's already priced about right. If you look out to the future, we're just trying to get in as cheap as we can. So the Zoom 125 for anything over $7, and it's really close to that right now. Teladoc. Telemedicine is going to grow to a $500 billion business in the next 5 years. That's why I like Teladoc. That's why I like OnTrack. OnTrack looks like it's setting up to go private or to get bought out. Teladoc, I guess they could get bought out, but I don't think that's the route they're going to go. I think they're just going to become the monster on the block. And if Salesforce buys OnTrack, which is kind of what it's looking like, then they'll become a big deal too. So these technologies aren't completely insulated from competition. However, you're going to end up with 2 or 3 big players, maybe 4, and it's a $500 billion market. So these are going to be big companies. Teladoc, hard to know exactly where the bottom is. I said 53 last week, and I had originally said like 65 back when it was way up here. So now we're splitting hairs. If you see charts coming down, Shooter's saying about 53 now, could go down to the low 40s. We'll see. I think that we can do it in real time, but if you want to sell a put, $60 put, $7 premium, that gets you down to 53. And again, why the higher put versus the bottom fishing price? Because you want it put to you. PayPal, which is, in my opinion, one of the best companies on the planet, could have one more wave down. Shooter is saying 137. I was saying 130, so I'll take his. I think I bumped my price up on the charts. If we can get in at 137 net cost, that's a heck of a deal. So what do? Sell the 145 for $8. There you go. There's your 137. And if it goes down a couple more dollars, well, just grin and bear it, because this company is phenomenally profitable. They have deals with everybody they need to have deals with. They're in crypto. They're in blockchain. They're going to have their own stable coin. PayPal, again, I think that they might be your next Visa or MasterCard. And then again, ARK Innovation, if you don't want to buy the individual stocks, if you just want the basket and you want it managed, here you go. And then the other ways to buy into these stocks are obviously QQQ, QQQJ, and then the iShares Evolved Technology Fund, which will throw in basically the broader theme of all the companies that aren't only technology, but are using technology well, which is something that I've talked about with the investment barbell. All right. People have a few questions asking about the satellite stocks. I think you can buy all of them right now. Sell puts, maybe, buy the stocks. I'll do an article just on satellite stocks this week because I've been meaning to do that. But I think that you can start nibbling in on all of those. Again, know what type of asset allocation you should have. If your investment advisor is already buying those stocks for you, you should skip it and stick with the more conservative stuff. Somebody asked, why are inflows into the market higher at the very end of the month and beginning of the month? It used to be retirement plans. Now there's institutional flows, and it's not as pronounced as it used to be. But there are 4 or 5 days where there's a lot of inflows because of retirement plans. Somebody says, I spent 10 days in Vegas last summer. Were you playing at the Golden Nugget, Sandy? Because if you were, it might have been me. You were playing at the Golden Nugget. I think I remember you. In any case, I was a kid from Milwaukee who was making fun of everybody. In any case, remember, when you take a look at how much to put into your asset allocation of a higher risk stock, you're talking 0.5% or 1% usually until it really starts going up. One of the things I will tell you that I have changed about how I buy in the last year or so is that I don't want to buy things until they turn up. I might sell a put to try to catch a pivot, but and insulate me from the time lag when I can discern that it's actually going up to when that first big move is over with. But 0.5%, 1% on the higher risk stuff, and then your more market risk stuff, which I have in the VSL, right? I've been adding what the risk level is. Is it speculative? Is it high risk? Is it market? Is it low? There's not a lot of low risk stocks out there. Everybody who talks about low risk stocks, I mean, seriously, there's like 20 of them. I mean, there just aren't low risk stocks. It's Berkshire Hathaway, it's Microsoft, it's Google, it's Apple, it's Amazon. I mean, there are not a lot of low risk stocks. When people try to tell you that some REIT is low risk, take a look at the cycles on the REITs. They just go up and down and up and down and up and down depending on the interest rates. There is no low risk REIT out there. No triple N, no triple net. These guys running around telling you the REITs are safe. They're out of their minds. And I've been trying not to swear as much. And I just warn everybody who's buying into the whole REITs are the greatest thing since sliced bread is they've never led the market for more than a year or two at a time. They get crushed when interest rates rise. The reason they look good for the last 20 years, even though they've still trailed technology and even the S&P 500, is that you've had interest rates falling. So that's been positive for REITs. So what if we're entering a new regime? I don't think we are entering the type of new regime that everybody else does who's an inflationista. I just think the dollar is going to get stronger. And I think that relative rates in America will be a little bit higher than other places. Why? Because we can afford it. And that helps us attract capital, foreign inflows. All those foreign inflows are going to come back. I am very convinced that I'm right about all this. I started this thesis in 2012 and have been proven right all along the way. The dollar is just going to keep getting higher. And it'll go through its little mini cycles within the trend, but the dollar is going to get stronger and stronger and stronger for the next 10, 15, 20 years. As the petrodollar goes away, that's actually better for the dollar because we're not oil dependent anymore. And people want safety. You see what's going on with China and Russia. Would anybody in a million years think that China is going to end up being the reserve currency? But what about Bitcoin? Governments can crush Bitcoin if they want to. They're going to allow it to be digital gold. They're not going to allow it to take over the transaction-based system. It's just not going to happen. So when you take a look at things, you really have to ask yourself the question is, where are we really going long-term? And in the long term, America is just going to become a better and better place to be. Now, prices will shift as the regimes change. And right now, we have to recognize that we're in an inflation regime, but it's only cyclical. This is not a new secular thing. It's short term this year, maybe next year, but really inflation is going to come down. So if the Fed can reload its bazooka the way that I said back in November and October, which is what they were trying to do, they'll reload their bazooka. They'll get interest rates up a point or two. and that allows interest rates to come down for the next 3, 4, 5 years. That's how that works. However, the rest of the world, which is slowing down more than we are, right? Because the peak growth, the V-shaped recovery ended already, but there is still pent-up demand, so it'll jitterbug down, it'll jitterbug back up. Just have to understand that nothing moves in straight lines. You can trade the cycles if you're good at it. If you're not, just buy the dips. And this dip that we're getting right now is pretty remarkable. Somebody asked what the 5-year risk factor on ARK is. I'd say it's a market risk. Might even be below market risk, but let's call it market risk. Keep it a little bit fudgeable. Look how cheap those stocks are suddenly. They have PEs of 20, 25, and 30 now. That's a normal S&P 500 PE, isn't it? You know, people want to say, well, high growth is more volatile. So what? So what? I make more money playing 9-10 suited than I do aces. I win more hands with aces, but I make more money with 9-10 suited. Which one do you want? Would you rather have 9-10 suited over and over again, or would you rather have aces over and over again? The reality is the aces just don't make as much money because guys with 9-10 suited blow them up and get paid off. So what you really want here is to have market risk with way above average growth potential. That I think makes the most sense for people who are growth investors. If you are more of a growth and income investor, you're retired, you're just trying to grind out your 10, 12, 15% a year, ARK for a very small percentage makes sense, just to give you some of that growth, but I wouldn't buy the individual stock unless you're using options. If you're selling puts, it's a whole different ballgame, right? If you're familiar with selling options, that's a tool in your chest that's really effective at generating income. And if we take a look at these incomes again, I mean, take a look at this. 8 into 145, what that's 6 some percent, that's over 6% for the next 6, 7 weeks. 6% for 7 weeks. That's 1% a week. You don't have to do this a lot, just a few times a year. And then when the stocks run up, you sell a covered call. If it gets called away, so what? You just rinse and repeat, right? You get back on the cycle, and you just do this. Rinse, repeat. It doesn't have to be every month. It doesn't have to be every week. It'll be 4, 5, 6 times a year where you write a batch. You let them expire and get called away or get put to you. Then you write another batch. And it all has to do with where the overbought and oversold signals are. In an oversold market, you sell puts. In an overbought market, you sell covered calls. Pretty easy. And then you let it sit for a month or two. All right, call it a day. I have to get out of this horrible shirt, and I'm going to run and get some bananas and cabbage because we are doing the smoothie thing this week. Got our super greens, got our frozen fruit. We're ready to go. We're trying to get in shape for February is going to be our diet month because we'll be in, like I said, spring training for a month and by the pool. So I'm going to try to trim down the front porch a little bit this month. No. The bananas and the cabbage will not go together. The bananas are for the smoothies. The cabbage are for dinner. All right. You have a great afternoon and a lot more coming out for you soon.